Now joining us are Vinay Rajani from HDFC Securities and Sandip Agarwal from Sowilo Investment Managers. Good afternoon, gentlemen. Largely, we are going to see the overall markets, playing out. The Nifty Bank Index, the Hiral, that has actually done well if compared to Nifty also. Just want to get in Sandeep also in that private banking space and the PSU banking space. What's the view coming like, Sandeep?
So I think, both these spaces are good, but we prefer more private banking space at this juncture because PSU has a massive outperformance in last few months. Having said so, we don't believe that, PSU will not do well, but we will prefer private banks from here on.
This is the second time this has happened, where last time we spoke about infra, this time we spoke about banks, and you have joining in with regards to where the IT discussion is concerned. One, the kind of conversations that are happening at the India AI Summit, plus you had Infosys, which had its annual AI day as well for investors. They've said around $300 to $400 billion is the kind of opportunity that the industry is sitting on. And secondly, almost 5.5% of their Q3 revenues came in from AI. If you peg that as compared to peers like a TCS and HCL Tech, how are you looking at this entire setup for the services industry? Do you think that the summit and all of this is coming at the right time and this is going to be a big opportunity?
So I think, summit is very much needed because people need to know what we are doing. And obviously, we are one of the biggest users of the big techs, although we have not bought GPUs in big quantity yet. But otherwise, we are the big users. And that is the reason, these companies are tied up with Jio and Bharti and everyone. So India is a very big market, 1.4 billion. People have so many devices. So ultimate consumer, a huge amount of future consumer sits here. So because of that, all these things are happening. And I am very pleased to see that, government is taking so much of steps to, enlighten people and also bring in best brains from the world. And definitely we have a huge opportunity, and a lot of money will obviously come in as investment in this space. Only thing is that, by the nature of the business which we are in, that is the services business, their, billing system is such that it is effort based, and AI is first of all goes and destroys the effort by 20-30%. So by nature and by structure, we are in a little difficult spot for some time. But once this impact of effort comes into the base, I think we will have good time. So probably, next few quarters little tough, and then maybe we will pick up in growth.
But Sandeep, if you just scratch the surface, the mid caps and the small caps, some product-based companies are definitely there. Of course, there is a legacy IT companies, the problem is there, but the entire street is talking about it. Let's go a bit deeper into it. I want to ask you about your product-based IT companies, something like a RateGain. What happens here? Do they move faster than the larger IT players? And if yes, which would be your top pick in the mid-cap, small-cap space, Sandeep?
So see, the way we see the tech industries in two ways. One is obviously market cap, which is more of the investor parlance. But as a fundamental analysis, we always go by the offering which is there. So if you go by the offering, there are now earlier two type of companies. One were the traditional IT services firms, and the other is the ER&D firms. And now a new replacement for, let's say, digital is coming in form of AI. So I think there are three fundamental ways to look at it. So I think the traditional is suffering because of effort reduction. ER&D is doing okay, but again, it is super expensive. And the third layer, we don't have much credible listed options there. So that is the way I would put. So I think we honestly go by PEG ratios. We never go by PE ratio. And on PEG ratio, everything is super expensive. We have this view for last 13-14 months. We have very, very less, I would say one or two companies, very small position since last 14 months. Before that, we had huge exposure to tech. We sold off everything 14-15 months back. And we are very negative since then on the sector because of the multiples, not from business model. So I would like to reiterate, we love the business. The IT services software business, superb business. We are market leaders. No one can replace us. My only challenge is that growth will be lower because of the cut in effort, and because of that the PEG ratios are insanely high. although they have corrected 40% from the peak, I still think in large cap there is 10-12% cut uh, price fall which can happen, and in mid cap up to 30-35% can fall, because the peg ratios are unsustainable and very, very high.
Interesting take over there. I know you've been negative, but the kind of cuts that you're talking about, Sandeep, if these cuts come in, as soon as they start to come in, would you be a buyer at those levels then yet again to enter?
So, we may buy some, because the index may correct with a difference, but the stocks which we are tracking and the stocks which we love a little bit, those stocks may correct before what I'm saying happens in the index level, IT index level. So whenever what comes, we will have a look at that point of time. But as I said, we will be not keen to buy anything which has more than 2 peg ratio at all. So we are very clear on that form, the structure which we have. We don't want to buy anything which is more than 2 peg ratio in the current environment. And see, we are waiting patiently for 14 months and it is down. Most of the stocks which we wanted to buy are now available at 30-40% discount to that price. And I am very confident we will get another 10% at least in the large cap and maybe 30% in the mid cap. So we will wait for our turn. If it comes good, otherwise we are agnostic, sector agnostic. We can buy something else which is available cheaper. That is the way we look at it.
So basically it is patience and the peg ratio which Sandip is following, and he's waiting for more fall in the IT space. Thanks a lot. It's always a pleasure talking with you, Sandip. But now let's move on.